Microsoft can't afford to miss the next technology wave, and Bitcoin is that wave. Bitcoin represents the greatest digital transformation of the 21st century. It represents digital capital. The global wealth is distributed across assets that provide utility and others that preserve capital. But risk is destroying trillions of dollars of that capital every single year, and investors are turning to digital capital in the form of Bitcoin in order to avoid that risk. Digital capital is economically and technically superior to physical capital, and it represents a revolutionary advance in capital preservation. The asset class itself is growing from trillions to hundreds of trillions of dollars, and it is backed by digital power along with political and economic power. It makes sense for Microsoft to be powered by digital capital. Bitcoin's the best asset you can own. The numbers speak for themselves. It makes a lot more sense to buy Bitcoin than to buy your own stock back or to hold Bitcoin rather than holding bonds.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Michael Saylor explores a strategic approach to Bitcoin, highlighting its significance as the next technological wave that Microsoft cannot afford to miss.
If you're going to outperform, you're going to need Bitcoin. And those bonds are undermining your options market and your equity liquidity. Luckily, you have an alternative. Public support for Bitcoin is surging, as is political support, as is support for the U.S. Bitcoin Strategic Reserve, as is Wall Street support. And the President of the United States says,
"Never sell your Bitcoin."
That's why we're entering year one of the crypto renaissance. And you have a choice to make. Cling to the past or embrace the future.
Bitcoin avoided flash volatility into the weekly close after November validated a key BTC price breakout. Still circling $95,000 on December 2, per data from Cointelegraph Markets Pro and TradingView, BTC continues to coil beneath what many see as a water's level, $100,000. Considering recent BTC price action, trader and analyst Rect Capital revealed a successful support retest. Bitcoin has rebounded plus 7% to the upside after successfully retesting $91,000, red, as support. They wrote about the daily chart in a recent post on X. In the short term, it will be worth watching how the price action continues to develop within this potential bull flagging structure. Rect Capital added that a daily close above $97,450 could kickstart additional trend continuation to get closer to challenging $100,000 once again. On the downside, Keith Allen, co-founder of trading resource Material Indicators, noted support now at $95,000 and $90,000. Short-term retest of support is possible. Trader Kevin Svensson reasoned in part of his X post examining 4-hour timeframes. Overall, my bias is bullish despite short-term. An accompanying chart targeted $93,500 as the potential next support retest zone. Bitcoin may not be at $100,000 yet, but BTC price action quietly made history over the weekend. Capping the November monthly candle at $96,400, BTC sealed its biggest ever one-month US dollar gains. It's a new ballgame. One bullish reaction from Corey Clipston, CEO of investment platform Swan Bitcoin, read. The candle stands out on the monthly chart as something unprecedented, yet in percentage terms, it is nothing out of the ordinary. Data from monitoring resource CoinGlass showed that at 37%, November's upside does not even compete with Bitcoin's most successful 11th months of the year. For Charles Edwards, founder of quantitative Bitcoin and digital asset fund Capriole Investments, it should soon redress the balance. Every cycle, we get 4 to 7 months of insane Bitcoin price discovery returns. "We have just had our first in November," he said over the weekend. "The next months will have insane long opportunities. The normie mind is not ready." Edwards continued that breaking the $100,000 mark would inject a new wave of parabolic behavior into the price. The real Fomo begins above $100,000. Once the epic sell wall falls, we enter a supply vacuum with a new retail-driven infinite bid. "Do the math," he wrote. Previously, Edwards suggested that Bitcoin should copy gold after its own breakout through key resistance this year.
Divest billions of dollars and slow your growth rate. Invest billions of dollars and accelerate your growth rate. You've surrendered hundreds of billions of dollars of capital over the past 5 years, and you've just amplified the risks that your own shareholders face. If you want to escape that vicious cycle, you're going to need an asset without counterparty risk. What if you could buy a $100 billion company growing faster than Microsoft for 1 times revenue? What if you could keep doing it every single year? It's time for Microsoft to evaluate its Bitcoin strategic options. We've created an open source model. You can plug in your own assumptions. You can convert your cash flows and your dividends and your buybacks and your debt into Bitcoin. If you do that, you'll add hundreds of dollars to the stock price. You can create trillions of dollars of enterprise value. You can strip away risk from your shareholders, and you can prosper on the Bitcoin standard. So do the right thing for the world and adopt Bitcoin.
Market stability may well allow a shot at acclimatizing to 6-figure Bitcoin. As noted by Trader Joe this week, funding rates across exchanges remain at manageable levels despite price trading near all-time highs. Lots of talk about price needing a bigger pullback and the market being unhealthy. Meanwhile, price chilling at $95,000 with near baseline funding, he told X followers. Funding has exhibited that relaxed trend for weeks, even as BTC/UST sets repeated records. Funding rates on Bitcoin are still really low, considering the number of people that have been calling top signals recently. Analytics account Bitcoin Data 21 echoed on X last week. Bitcoin Data 21 compared the current Bitcoin bull market to 2021, when funding rates were multiple times higher. Even March 2024, when BTC/UST set old all-time highs of $73,800, saw considerably higher funding. The labor market dominates the week's U.S. macroeconomic data releases as the countdown to the Fed's next interest rate decision begins. Job openings on December 3 will be followed by jobless claims 2 days later, the week then ending with unemployment reports. It's a huge week for the labor market. Trading resource the Kobayashi letter said about the macro diary. Kobayashi noted that the prints constitute the last week of labor market data before the December 18th Fed meeting. On December 18, the Federal Open Market Committee, FOMC, will decide whether to change benchmark interest rates. As Cointelegraph continues to report, overall bets remain skewed to a fresh 0.25% decrease, but markets are less certain than in previous months. Data from CME Group's FedWatch tool currently puts the odds of a 0.25% cut at 67%. If a Bitcoin breakout doesn't happen before the DEC 18th FOMC meeting, a £25 billion rate cut would not only be an early Christmas gift, it will likely be the catalyst that sends $BTC past $100,000. Material indicators, Allen said. On the other hand, no cut could be the catalyst that triggers a correction and a BTC flash sale. And do not forget to subscribe to Bitcoin Saylor. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.